Hey everybody, this is Jose. We are about to start, like 30 seconds. So this is a sound check. Please go ahead and type any confirmation message. A quick hello would do. So type it in the chat box, please, so I know you hear me. And we are ready to start. Sound check, please. Thank you. Okay, so we just reached the top of the hour. Again, sometimes there is a little bit of a delay between the YouTube stream and our physical locations, but I would really need confirmation so I know the sound is okay, guys. Please go ahead and give me a confirmation. Okay, good. That's perfect. Very good. Fantastic, everybody. Welcome to the session. Let's begin. Today is September 26, 2019. My name is Jose Blasco. I will be your guide. Today, I am guiding you in the world of longer-term trading. So we are running our longer-term get-together session. And longer-term, for the ones that you are new to the session or watching it recorded, that means that we're going to be looking at trades anywhere above and beyond intraday trading. Normally we use options for that purpose because that way we can structure our trades in two ways: directional trades and non-directional trades. And basically we have rules to manage a portfolio, and we keep adding trades. All of us, of course, we have different positions running at this moment in the portfolios, so we'll end up accepting some trades or discarding some trades, but basically we'll be looking at opportunities, as I said, for both directional and non-directional opportunities. Okay? Anyway, before we start, disclaimer: the following video clips demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And this takes us to the end of the introduction of the session, and therefore here's our beautiful trade station with our even more beautiful UFOs waiting for us, so we can use them to plan trades, okay? And again, one more time, take advantage of those market opportunities, okay? So feel free to interact with me at any time. The way I will conduct the session is just like always, okay? We always do the same because trading is about being mechanical. So we're gonna be looking at directional opportunities, as you can see, directional long and directional short, okay? And also in the bottom part, we got the credit trades, which are purely non-directional, like the one on the top with ND, which stands for non-directional. But also we can be not so purely non-directional, and that's what we call neutral trades, neutral with a little bit of a bias to the upside, or neutral with a little bit of a bias to the downside. Okay, so we're gonna be approaching our plans using our scanner that saves us time. and add some odds in our favor, because obviously the filtering parameters are designed to find stocks that are in a good liquidity condition, proper price points, moving mode or quiet mode, looking at the auto climate, all those different rules that you all know we have in place if you have been attending sessions prior to today. If you haven't, I can give you a few indications of things important for you to do, which is, of course, to utilize our sharpening sessions, the one that we run over the weekends, because this is normally where we build all the rules, all the set of rules that we then use during the sessions. Okay, I have a couple of comments here on the chat box, so let me take a look. Maria, how are you, Maria? Good to see you. Oh, that's very, very nice. That's a very nice message from you, Maria. Very, very, very appreciated, and certainly welcome to our community and our group. And again, I was just saying it. I'm not sure if you were already connected or not. But anytime you have any question or anything you need, make sure you phrase it on the chat box, okay? And I'll be more than glad to take your questions and give you answers and so on, okay? And also for everyone, I often don't say it because, we kind, in one hand, we kind of know, but also sometimes it's good to do some refreshers. So we have an email, which is reach@tradewithufos.com. So if after the session is over, you were to have questions either about the session or your own trades, when you're applying both AutoClimate, AutoUFOs, and all the different tools that we explore together, feel free to send an email to us, attach a couple of screenshots so your question could be properly understood, and then again, we'll be delighted to give you answers, okay? By the way, we will also soon run a Q&A session in one of the sharpening sessions over the weekend. So be ready for that as well. If you have questions, sometimes, a quick email could do. Sometimes the questions are more in depth, or maybe the question is simple, but the answer should be in depth. And then it would be good to use those Q&A session when we do sharpening sessions over the weekend. Because that way, using a microphone and, being able to switch charts and everything, that would be the way on how I can give you proper answers, okay? But anyway, quick reminder for everybody, and I know many of you already know how to contact us, but it's important, especially for the new members of this community, okay? So welcome, Maria, and welcome everyone if you are watching this recorded as well. Lisa, how are you, Lisa? Very nice to see you here. So anyway, so let's begin, okay? So let's go ahead, and I'm just gonna click on ND, non-directional, and we're gonna begin with the non-directional trades, okay? I mean, you know already, probably you are thinking about it already. You are probably thinking, okay, Jose, where is your earnings search page, right? Because one of the things that our filter for non-directional trades does is looking for stocks with a pretty high level of inflation for the price of the options, okay? Meaning that those options are overpriced, okay? And we are always skeptical as traders, isn't it? It keeps us safe. And in this case, skeptical means that when you see an option that is overpriced, the question you need to ask you is, why is that, right? And the classical questions for options to gain too much value is earnings, okay? So I am opening here the page of Yahoo Finance that seems to have changed their image a little bit with a new logo. And what I'm gonna do here is type in the box, find earnings for symbols. I'm gonna be typing the symbols that we want to use, okay? So we confirm that yes, options are indeed overpriced, but also there is no apparent reason for it, meaning that we're not gonna have a gap on earnings like normally happens, because obviously a gap, okay, would be the direct contradiction to what non-directional trading means, okay? Non-directional trading means we want the market to stay quiet, and a gap is the complete opposite. A gap is a massive move, and we certainly want to avoid that, and therefore being aware of earning dates is critical, okay? Again, we talked about that before, but it's always very, very healthy reminders, because sometimes we get excited just because maybe last month you had a good trade with Costco, now you see Costco on the list, and you just go for it, and you forgot to check earnings, okay? So we always need to remind ourselves of not skipping any one of the steps, okay? Yes, Maria, absolutely. Okay, and since you're talking about it very quick as well, so when you get to our YouTube channel, which is the channel that all of you are using at the moment to see us, or Facebook, that could be too. We have a collection of, we have the live now, which is what's going on right now as we speak. By the way, if you haven't subscribed to the channel, make sure you do subscribe and click on the bell so you receive the notifications. Okay, but basically these are the two sections that are important for new members of the community, such as Maria. Okay, so the vitamin T pills, okay, this we all need to be extremely thankful to Brian for the amazing job he's doing here. So Brian is conducting short videos, like 20-minute long, something like that, sometimes 22 minutes, sometimes 15 minutes, something like that. And so we call it vitamin pills because, you know, it's kind of like the supplement pill that you take every day for you to have a good nutrition in your life. Well, in this case, is the trader's vitamin, is the vitamin T. So the idea is that you guys build a habit where in a regular basis every day or at least a few times a week, you keep watching those videos that Brian is putting together. They are short to watch. So maybe you watch it while you are in the dentist consultation in the waiting room. Okay, so it doesn't matter where on your phone, but just keep absorbing that information because it will make you a better trader. So some of the aspects of vitamin T pills are the basics of trading. Okay, so here Brian, for example, today was talking about risk management. It could be many other things, okay? But also we have TradeStation and TradingView, meaning that in those other sets of videos that we keep building, and this is gonna grow as a library. So we are talking about how to use the tools in those two different environments. Could be TradingView or could be TradeStation. Okay, so that's quite important. Then in the bottom part we have the sharpening sessions, which is the one I was talking about. So those are kind of like the complete opposite of vitamin T from a duration point of view. Okay, vitamin T it's good stuff, no joke, but it's short duration. Sharpening, it's good stuff as well, but now we're just gonna take our time. Okay, so we do it when the market is closed over the weekend, and we just do like normally 2-hour long sessions, sometimes even 2 hours and a half. Okay, and we just go deep into things. Okay, and then during the weekdays we do the longer term live trading, which is today, and yesterday, for example, we did short term live trading. Which again, this is when we help you to put some practice in to develop your skill and also master the use of the apps such as AutoClimate and AutoUFOs. Okay, again, quick reminder of something that many of you know, but it's always good to have a little bit of a healthy reminder like this, which I have to say I don't do often enough probably. Okay, but anyway, so a good excuse for me to do it today. So again, looking at the list, okay, we have multiple stocks here. We're gonna start planning on non-directional trades. Okay. And as always, you know, when looking at the list of stocks, I am more attracted when I see stocks which are $100+ dollars per share, $200+ dollars per share. This is always more attractive for me than looking at stocks which are $50 a share, $15 a share, $20 a share, way more attractive, okay? Especially for non-directional trades, because we're gonna be selling options, collecting premium. Options are known as a derivative for a reason, meaning that they derive their price from the asset. So normally, the more expensive the stock, the more expensive the option. So if the stock is expensive, by selling options, okay, you collect more premium, okay? And the life of a seller of options is a life where the most you can make is what you collected when you sold the option. So we certainly want to collect the greatest amount of premium, and therefore stocks with a higher price value normally give you a little more. Not always, because options are priced because of other factors, but again, the scanner took care already of looking at those options and understand they are high value. Okay, so since they are all high value, I love to begin with the higher stocks, okay, especially if I have traded them before, such as Costco, which I know there are liquid companies, liquid options, etc. So then, you know, I'm more than happy to go prioritize those symbols in front of others and begin planning trades with those ones. Okay, but again, remember, before I even start, okay, I need to look at the earnings date, which in this case is October 3. Okay, now when looking at the calendar, tomorrow is October 27, and the next Friday is October 4. So what does that mean? We cannot use October 4 expiration date, because if we did, we would have the earnings potentially, and sorry to be a little direct here, but we may have the earnings explode in our face. So we better either avoid this trade or try to make it happen using September 27, which is tomorrow, which normally that would not work because it's only 2 days of time decay and normally it's very little premium, but it's always worth it to check, because if it does work, then you know, it's pretty cool. Okay, now I have a warning here. I'm looking at the UFO performance stats, okay, with regular session. It's showing 47%. Remember, we don't take anything below 50. So I'm gonna check pre and post market to see if we are above 50, and we are. Okay, so yes, we are fine. But wait a minute. So 1 second here. I want to look at daily time frame. I want to look at the monthly time frame. Yeah, so we are making all times high. And when looking at this all times high, it seems that we only have one red UFO. And remember, for non-directional trading, we always shoot for at least 2 red UFOs above and 2 red UFOs below. Because if we don't have at least 2, okay, if we don't have at least 2, then it's a little bit of a problem from the point of view of you have less power to defend yourself. And remember, I say that all the time because it's true. Stocks are fragile. There are many outside forces that impact stocks, such as the market trend, such as the sector, such as stocks that are maybe competitors. And therefore, in this case, since we only got one red UFO, I will discard this trade. Later, maybe we can plan it as a neutral trade. Okay, well, no, we don't have it in the list. If I had it in the neutral trade as a neutral long, then I can go for it, but it's not even in the list. Okay, so therefore, we just forget about Costco. Okay, so what can we do? Well, we can check IBM. IBM is another stock with a higher price point, if you wish. Okay, so those options should be quite okay. And when looking at IBM, we can see the next expiration date is October 17. So that's good. It makes our life easier compared to the prior opportunity, because the next Friday is October 4, the Friday after is October 11, and the Friday after now is October 18. So in other words, we can use October 4 or October 11. Any of those 2 expiration dates would be good enough for us to plan a trade. So with pre and post market data, we got 52%. If I was to change to regular session, the 52 becomes 47. Okay, so clearly those institutions are a little cheeky, isn't it? They are placing their orders more intensively pre and post market. In the case of IBM and AutoUFO, it's it's really helpful in the sense of uncovering that reality. Okay, so we will need to use pre and post market to identify those trades. Now, the first thought, I mean, you're probably thinking like me. The first thought that comes to my mind is that we only see one red UFO on the screen. Okay, so I want to make sure that this high is not all times high. Okay, and notice how if I look left on IBM, we got more stuff. Okay, so the most stuff that we got on IBM is all the way to April 18. Okay, or March 18. So I'm gonna go back to the 55-minute time frame, and instead of loading 1,597 bars, I'm just gonna manually set 3/1/2018, okay, just to at least load enough data to see if we have anything above that high. And you can see there is red. Okay, so again, in any case, I also want to adjust this. So 50% is with pre and post market. Regular session would give us 49. So again, still pre and post market. Okay, even though it seems it's been changing through time a little bit, but still pre and post market is the way to go with IBM. So now we know where the key UFOs are, and this is the time where you would want to load Option Station Pro. And as I always say, without even thinking, just input an Aaron Condor on IBM just for Option Station Pro to tell us, based on mathematics and stats, how far that stock is supposed to go. Okay, let's pretend for a minute we didn't know UFOs exist. Okay, so how far is that stock supposed to go just based on pure stats? Okay, we never want to take a trade based on pure stats, because mathematics are pure mathematics, even though mathematics are amazing, but pure mathematics in this case would not be fully aligned on the nature of the markets. Okay, we need to find the unfilled orders. That's the real nature of the market. But it's a good reference point, as you will see. Okay, as I add the Aaron Condor here, as you can see, I just added an Aaron Condor, and I didn't even go ahead and change the strikes. The only thing I care about is the expiration date is October 4. And the moment I do that, I will change that last 5% that comes by default to plus 1 standard deviation, and the plus 5% I'll make it minor 1 standard deviation. So now I know that starting from today until October 4, based on pure stats, which again is just a reference, that stock is likely to range between 139 and 147. So knowing that 139 and 147 are the two key price points that I care about, so 139 is here and 147 is somewhere there. Okay, so now what you would want to use is UFOs that are beyond that. Okay, beyond that. So, and also we want at least two, isn't it? So this one is a little beyond, but it's only one. So that forces us to use at least that 153.5. Okay, and if I was to use that 153.5, and I would want that particular line to be kind of equal distance to the one below. So if I project, notice that the fair UFO to be used actually would be that one, okay? And now I would be giving myself an opportunity for this market to be ranging, starting with a kind of a midpoint in that range, okay? Statistics suggest we're not gonna get there anytime soon, at least certainly not before October 4. And on top of that, I got multiple UFOs to defend myself, meaning that if that market drops, it's likely to move back up. If the market goes up, it's likely to move back down, okay? So now, before we keep going, we need to look at, how much we get paid for the 153.5. That does not even exist. And on top of that, actually, the 152.5 only pays 2 cents, okay? So yeah, that UFO is so far away, it's very idealistic, but at the same time, of course, other market participants are smart people and they are not willing to pay much for it. So what if I move to October 11? Well, October 11 still doesn't pay me enough, okay? Still doesn't pay me enough. And what if I move to October 18? Well, now I may get paid enough, I may get paid 86, but there is a reason for that, okay? And the reason for that is that earnings happen on the 17th, and we said it would be forbidden, not allowed by our rules, to use October 18, given the fact that earnings are happening on October 17. So what do we have in here? We have a trade to be discarded. Okay, the whole setup on the chart and everything is looking fine, but unfortunately, to get the premium we need to justify the trade, we will not be able to do it using either October 4 or October 11. So we just need to go for the next stock in the list. Okay, now I will pause here for a minute when it comes to non-directional trades, because as we speak, we are 10 minutes away from the market open. As you all know, or most of you should know, the options chains reset 10 minutes before the market opens. So now, if I look at other non-directional trades, I will not be able to do my iron condor and statistical calculation because everything is reset to 0. So I can only start doing that again 10 minutes from now. Okay, so that means that for the next 10 minutes, I will not be looking at non-directional trades. I will not be looking at neutral trades either. Okay, and for the next 10 minutes, I will be focusing on the directional trades just to confirm that my chart setup is fine. Okay, so then when the market opens, it's either I will take those directional trades or continue working on the non-directional, since now the option chain will be again running. Okay, Lisa has a question. No concerned about the UFO 153.6 having no range? No, I am not concerned, Lisa, and I know it's not ideal. Okay, it's not ideal, but again, remember, in this trade, we are making money on time passing. So you already have one UFO to defend yourself. You have a time decay working for yourself. You have distance enough where statistics suggest that that stock is not going to go there, even without the UFOs. But the fact is that you have UFOs. So you have already multiple ingredients working for you, and therefore it would be absolutely fine to set that range based on that 153.6 UFO, even though it's a one, it's a 0 cent UFO if you wish. It's a one line, okay? It would be fine, okay? And again, the reason why it's so narrow is because again, this pile of order identified by UFO was placed during pre and post market session, and it seems that whoever placed that order, so probably just place an order at a one price, okay? And that's what the app is identifying. You can see below there is another one here with 132.5, okay? Now, for your question is very good, Lisa, as always, and certainly for directional trading, I mean, I will certainly not take the trade, because for directional trading, already for you to get filled, and go long or short, you need to get filled at the ask price when you buy or the bid price when you sell. And already, you will have like 1 cent difference between the bid and the ask, at least 1 cent. So again, it's kind of like you're already entering, and it's kind of like the UFO is gone. So it's not giving you that kind of like zone on the chart where price got space, okay, to kind of, naturally stop falling and start rallying, or stop rallying and begin falling. Okay, but again, in this case, because we are doing non-directional trades, okay, I am totally fine relying on what the app is giving us, even though in this case it's going to be a one price UFO, okay, which is less common, okay, but that's what we got, okay. So very good question, Lisa. Okay, so let's continue. Okay, and as I said, we're going to be looking at directional trades. Interesting market setup, by the way, at this moment in time. Just out of curiosity, I was looking earlier at the S&P. Not only earlier, all the time, because obviously it's a key market worldwide. But earlier I was looking at the S&P, and something I was noticing with the climate is that we've been falling for 4 candles out of a market that normally falls for 4.5. So again, a new UFO formed here yesterday, and price now is approaching that UFO. I would not be surprised to see a major move to the upside, and tomorrow either get an unconfirmed climate or a fully confirmed blue dot. I would not be surprised, okay? And that market to resume and begin going back up again and starts making all-time high. At least this is what statistics suggest. And of course, statistics, okay, if the market was to really crash hard, then, statistics would then fail, and that means that we have a very intense climate, okay, which was not expected based on probabilities, okay? But being the fact, being true that this could happen, probability suggests the opposite is to happen. Okay, so I'm gonna start with looking for the long trades. Okay, and same approach. We got multiple opportunities here. I'll start with Walmart because I know it's a very liquid stock with liquid options. Also, the price point is a little higher, so I will welcome that. Okay, now first warning sign here. We need to be careful. With Walmart, we already got 7 candles into the climate. Okay, where normally that climate lasts 7 candles. Remember, the rule allows us to still get in. Okay, you would take that number 7, okay, calculate, I'm rounding up, by the way, so 674, I make it 7. You would calculate 50% of it, okay, that would be 3.5. So 7 plus 3.5, that's 10.5, okay, and therefore you would kind of give yourself a little bit more flexibility and expect, that it's not going to stop at 7, but, maybe it keeps going a little more up to 10.5, okay, it would be okay. But the reality is that based on pure stats, above 7, begins now to be less probable. Sometimes you can see climates propagate for longer than 7, okay, but already when you get to 7, it's kind of like, when you are getting into that territory where, now you are hoping a little bit is going to continue. And we don't want to hope, correct? So how can you deal with this? Okay, well, the suggestion I made many times in past sessions is, okay, go for it, but use half of the size, okay, of the normal risk that you would normally take. Just go for half the size, okay? If your normal risk is 2%, go for 1% risk. That would be the way to approach it, okay? So anyway, here's Walmart, okay? Walmart is giving us 53% probability with a pre-post market. With a regular session, 53 becomes 52. But by the way, I just want to have a little bit more closer data, so I'm going to go back to my 1,597. So probability stats 49, pre-post market become 56. So pre-post market actually is better. Okay, and when looking at the average, we are dealing with 117 something. Okay, 117 something. Walmart is going to open a little higher than yesterday, 0.19 higher than yesterday. So that average, okay, when the market opens, I would say it's going to be around 118. And what else we have around 118? Well, a beautiful UFO between 118.08 and 117.81. Remember, we don't need to be precise with stocks like when we do futures or forex. Okay. Lisa, I have noticed many times if there are no UFOs near EMA and typical time hit, the climate will flip. Yes, you are absolutely right, because again, what is the underlying force that moves prices? Is the on-field orders. Okay, it's the whole concept about everything we do. So the climate is important because the climate tends to last, but the climate can only last if you still got on-field orders pointing at the same direction. So if you have a climate but you don't have the UFO around the average, okay, many times the climate will flip. Okay, so you are absolutely right on that one. Okay, and that again says a lot about you, Lisa, on the amount of time you put in front of the screen with practice and observation, and you are developing a very skill set there. Okay, so good job. So again, so this trade is a trade for us to plan, my friends. Okay, so let's go ahead. So since we do have a proper climate and so on, it would be time to maximize the daily time frame, switch to the next common time frame, going from daily to weekly. And the moment we went from daily to weekly, you will now want to enable AutoUFOs, and this would help you to set the target. Okay, but wait a minute. Let me disable AutoUFO for a second. If I look at the monthly time frame of Walmart, where are we at? Okay, this is a stock that is now beginning the process of making all-time high. Okay, again, are we delighted by that? Well, yes and no at the same time. Okay, why? Because when a market is making all-time high, okay, I mean, notice it could keep going and going and going and going and going. Okay, that's what all-time high mean. There is no ruby color UFO. There is no sell orders. So potentially, okay, if the stocks were not to depend on external forces, potentially they will go to the moon, right? Because there is nothing to stop them from going higher because there is no sell orders, okay? Now, in reality, we cannot be that hopeful, but the reality as well is that we do have an opportunity in front of us where we can have a very nice move. So this is the type of trades where normally we deal with them with no target. And the only thing that we do is get into the trade and just keep trailing stop. And what I mean by that, because we don't use stops, isn't it? So what I mean by that is that, in this trade, you're going to be buying a call. Okay, we're going to be buying calls. Okay, and we're going to be buying calls. This is what we're going to do. And the more the stock moves, the more you make. And if the stock goes against you, what's the most you can lose? What the most you can lose is what you pay for the call. So let's say, what's the expectation here? The expectation is that Walmart will drop to this beautiful green UFO and from there go up. Okay? But what if that UFO doesn't work well, okay, and price goes down? Okay, well, when it goes down, it's likely to go up now, okay, because you got more UFOs. So if you were to use stops at this price zone, that could be problematic, especially given what I just said, stocks are fragile. It may goes below 117.81 just because of some external force, but then comes back to normal just because that external force stops impacting that stock. So again, to avoid being stopped out at this point, okay, we love to not to use stops. And this is not a hopeful action. This is a very, very pre-planned action where you know exactly what you pay for the call, and you know that whatever you pay for the call, let's say is $500, so that's the most you can lose. So you could certainly allow for the stock to go lower, okay, and then it's likely to come back up, okay, and if it doesn't, the most you will lose is 500 without using stops, and if it does come back, then you are back in business and you never got stopped in here where the arrow is if price was to go below 117.81. Okay, so this is how we deal with it. Okay, but now the other story, okay, and I'm re-explaining things I have explained before, but I want to make sure everybody's on board. The other thing that may happen is that as price reaches that UFO and goes back higher, okay, what may happen is that new UFO form, okay, new UFO forms, okay, and it keeps going, okay, and then when it goes to the UFO, bounces and keeps going, okay. So basically, every time new UFOs will form, you would want to have a virtual stop below every one of those UFOs. So if at any moment in time, price was to break that UFO that you expected to continue with the climate, but price was to go below, then you will give yourself some sort of an alert to go ahead and close the call trade, and therefore the profit made would be from 118.08 to that level, okay, which again is not the best profit in the world, but you would make some profit. And if those UFOs kept working because you had an intense move, such as moves like that, which is what normally happens when the markets begin making all-time high, then you will just collect a very, very nice profit out of Walmart, okay? So now, having said all of that, the market just opened 2 minutes ago, so we're gonna plan this trade. And I was saying, having said all of that, make sure you understand that for you to take this trade, you do need a long trade in your portfolio. Okay, let's say your portfolio already have 25 long trades with stocks, and let's say you are risking 25% of your account in long stocks. well, you certainly should not get long further than that. Actually, we had a rule, isn't it, to never surpass 6% risk in your account overall. So that you would be way too over positioned. Okay, so you never want to do that. Okay, so I'm gonna assume that you need this trade, and I'm gonna plan it accordingly. And then, of course, you decide if you want to take it real live with paper money or not to take it at all. Okay, you will decide all of that. So I'm just gonna go for Walmart. Since we got no target, we cannot calculate the TTT time to target, which we do in directional trades. Okay, and therefore the only way for me to be able to decide on the expiration date would be to go back to my Yahoo search website, where I can go ahead and consult what is the next earning report to be expected for Walmart, which happens to be November 14, and therefore I will want to pick, in this case, November 15 expiration date. That would be my pick. Okay, now this expiration date, okay, doesn't mean I'm gonna stay until November 15. Okay, you need to be out prior to earnings, because you may have collected all these beautiful move to the upside, and next thing you know, you have a gap down on earnings, like 20% down, and all the profits are erased overnight. So you never ever want to do that, and always be out of the trades prior to earnings, because staying for earnings, it's a way of gambling. Okay, and we don't do that. Okay, we are taking trading seriously in this room, and therefore we don't do that. Okay, so November 15 is the one to be selected 50 days from now. So we are giving ourselves 50 days for this trade to work out. And the reason why we are picking that one, again, you can go back to the sharpening sessions to understand all the reasons, but basically this expiration date will offset the time decay erosion, thanks to the fact that as earnings approaches, that option will gain a lot of value, because a lot of people will be buying those options to gamble on the earnings report, and that's gonna work in our favor, and stopping the effect of time decay. Okay, so that's why we're gonna pick this one. So I'm just gonna go ahead and right click to analyze and buy a single option. Okay, and now here in my simulation, in my analysis tab, I meant to say, I'm gonna input manually the value of this UFO. Okay, which happens to be 118.09. So 118.09 would be the entry price for this trade. So 118.09, 118.09, that would be the price. Okay, and therefore the only thing I'm going to do, knowing that I'm using November 15 expiration, is I'm going to keep switching the strike until my delta at this price is around 30 to 35. Okay, which is the typical rule that we have been using. Okay, so what if I go for the next one, which is 125? It becomes 23. Okay, what if I do the 120? Now it becomes 44. Okay, well, not ideal. I would love to have an option which is like the 122 or something like that, and that would give me what I need. Okay, but we don't have it. Okay, so in this case, it seems that we're gonna have to go with the 120 call that expires in November, and notice that the predicted value for this option when you get filled is going to be around $290. Okay, that's the expected value. The current value is 347. Okay, because the stock is currently trading at 119.29. It's not time to take this trade now. You will want to wait for the stock to drop into 118.09, expecting it to rally out of that price later on. Okay, and therefore when the stock drops, the call lose value, in this case from 342 to 290. Okay, so knowing that every call is 290, you know the risk of the trade will be around 290. Therefore, let's say you want to risk, I don't know, $600, so you buy 2 calls. Let's say you are okay at risking close to 300, then you buy 1 call. Let's say this is too much, then you pass on the trade. Okay, that would be the plan. Let me take a look. Lisa has a question. So 114.4 would be used for damage control. You know what? It's a shame I didn't see your message earlier, because I'm not sure about the context of your question. I don't remember what I was looking at when you typed that. So if you could give me a little bit, if you could just get my focus into your question by adding a little information here, so I would be able to answer your question. Cool. So let's go ahead and place the order. Okay. So the order, it will be placed by clicking trade. Okay, and the moment we do that, of course, I'm using as you know, in the sessions I use a SIM account. So I'm going to move this to market. I would check mark activation rule. and go ahead and input a price rule based on Walmart. So click add. Walmart being less than or equal to 118.09, okay, which is the price that we just set here on the left. Okay, so if I do that and click OK, and now I click place order, I got this confirmation window that says you're gonna buy to open the November 15 120 call, and you would do that only if Walmart is lesser or equal than 118.09. Okay, so I'm just gonna click yes, and this order would now enter the system, and you can see that in the receive order in the upper part where I have my today's orders, you can see I have this Walmart trade that just got in. Okay, so the trade is in as we speak. Cool. Okay, so looking at UFOs and price action for the trade, assuming 2 UFOs will turn the dollar up. Oh, okay, got it. Yes, I understand now. Yes, certainly. So now again, normally, I mean, you could certainly, it would be probably a safer bet to wait for a bigger drop in price to enter this trade. But then you will have two problems. Number one, that price is below the average. So you would be probably buying in a change of climate. Okay, so if the market goes so low, it just may be a pause on the climate. Like for example, sometimes it happens, isn't it? Sorry for that. Look at that. Look at here. Red dot, right? So it's a pause in the blue climate. Okay, it's a pause and then it keeps going. Okay, just like here, we have another pause. Okay, so sometimes it does happen. Okay, sometimes it happens. So, coming down here is not necessarily that bad. Okay, but at the same time, it is kind of showing you that the climate may change. Okay, so this together with the fact, I mean, why we will break the rules, isn't it? So the rule is to buy around the average. Okay, the current average is 117.71. So, it's close enough to this UFO, we'll take it. Okay, but the other reason why is because when the market is about to make all-time high, typically there is a lot of energy into that fact. Many people do breakout trades and so on, and therefore you don't get to see deep retracements in price. Price just dips a little bit, bounces, and just keeps going like it's going to the moon, right? And that's what I'm trying to catch. So therefore, I don't want to be too perfectionist when it comes to picking a very low price. I'm okay with that upper price. It meets the rules, so we'll do it. Anyway, so trade number one, my friends, we have it. So Walmart, directional trade long, the trade is in. If you guys place the order in the system as well, I would love to know. You don't have to. Okay, maybe you just do it for practice purposes with a demo account, whatever it is, live or simulated. I always like to know what you guys are doing on your side since I don't see you. So if you put the order in the system, please let me know. I would love to know. Now, let's go back to the other trades that we were going to plan. Remember, we were going to plan a trade on, was it IBM? Wait a minute. Oh, no, not IBM. Sorry, guys. I got confused for a second. We looked at IBM and Costco, and we decided there is no trade. Okay, so we're gonna keep going and working. And again, I'm looking at all those stocks. Okay, and I want to make a few comments. So first, Coca-Cola, apart from low price, you heard me say before that Coca-Cola and Pepsi-Cola normally have very little premium. Okay, in it, Lisa, very nice. Thui as well, very nice. Love the teamwork. This makes me super happy to see that you're engaged on the process and so on. And again, it's fine, guys, if you take the trades with paper money if you are in learning stages, okay? But some practice, will really open your eyes versus just watching it from the sidelines, okay? So teamwork, I love that. So anyway, I was saying that Pepsi and Coca-Cola are normally stocks that provide very little levels of premiums. So I'm just gonna skip it and go straight for UPS and UNP. And while I'm loading those stocks, of course, checking the earnings reports, I started with UPS. So let's go for it. Okay, so UPS, United Parcel Service, we got earnings set to be on October 22nd. Okay, so that's pretty cool. We can use up to October 18 expiration to do this trade. Okay, now what type of setup we have? Well, 43% is the results we get with pre and post market. Regular session is giving us 49.72. This is not making me too happy. I always like to be above 50, but you have also seen me at times only for non-directional trades to take percentages as low as 48. Okay, so sometimes it's okay. I mean, when I say sometimes, the rule should be strict, and you should never have sometimes. So what I mean by sometimes is that sometimes you run the scanner and you have no trade. Okay, you have no trade, and you only got one symbol that gives you a trade, but it's 49% instead of 50. Okay, so then in that case, it's okay. You can take it, it's fine. You still got the time decay, we still got the probabilities, we still have some UFOs. They are a little less stronger than others, but still some UFOs, it's still time decay, so it's okay. Okay, so what I meant sometimes, I meant it related to the amount of results given by the scanner, not the process. We don't bend the rules. Okay, guys? So anyway, so let's take a look. Okay, and again, the way to do this is without even thinking. You just get into the option chain, type UPS. Okay, we're gonna go for the next expiration date. We always start with a shorter expiration date. Without even thinking, as I said, right click, analyze and sell, Iron Condor. Change +5 to +1 standard deviation and minus standard deviation. So now we know, okay, that from now until October 4, based on pure stats, we got a range that should be anywhere between 114 to 122, more or less. So 114 to 122, and again, without even thinking, I'm gonna draw two lines. The one on the top will be around 122, okay, which is somewhere here, and the one below would be around 114, which is somewhere here. Okay, so that's what we have. Okay, and what does that mean? Well, it means that really here we only got one UFO, so that's not good. If you were to put the top of the range where this UFO ends, that would certainly be beyond 122. So based on stats, we are not likely to get there, and you have 3 UFOs to defend yourself. Okay, and for the bottom part, based on stats, if we were to place the line here, you would have 2 UFOs to defend yourself, and also based on stats, you are not supposed to reach 113. Okay, because the stats suggest 114.37, so that's like $1 below. Okay, so the setup on the chart is looking good. The real question is, do we get premium enough? So if I sell the, what did we say, 122.78, really that's 123, okay, we get 15 cents, okay? Well, we cannot accept that, okay? We cannot accept that one. Of course, we are in demanding mode, okay? Because we are proper traders, okay? So we need to get what we need, and if not, we're not gonna accept it, okay? And just to remind you, okay, if you are new or watching this recorded, I'm just bringing the rules into the main screen. Okay, just bringing the rules. Okay, and what the rules suggest, let me move down into all this writing. Here we go. So we have the rules here, and here it says that we are shooting for 35 cents. In extreme cases, we could take 25, but never less than 25, and this is 15. So obviously, we're not gonna take it. Okay, so this forces us to go for the next expiration date, which is October 11, where the 123 pays us 38. So that's good. Okay, but I'm sure you guys are thinking what the concern is now, isn't it? So the concern now is, okay, we get more premium, but what about probabilities? Okay, because if I change October 4 to October 11, okay, now it's telling me 122.91, 113.23. Okay, so 113.23. Okay, well, I can fix that by moving it down to 112.59. But then we got the upper part, 122.91, where it's not fine. Okay, I will need one more UFO, which I don't have. Okay, so where are we at with UPS? Well, it seems, okay, it seems that maybe we're lucky here in the sense of having more UFOs from the beginning of last year, January 18. Okay, so I'm gonna go back to the 55-minute time frame. And as I did before, I am going to load data from January 18, okay? And this may reveal some UFOs above price that I am not aware of at this moment in time. Notice the PD on the upper left. This means pending data. So we are waiting for this to load. Yeah, Vincentius, if you're new to options, then you have a little bit of homework on your side, on your end. You will need to catch up with the sharpening sessions I believe we got like 7 sessions called options 1, options 2, all the way to 7. They are 2 hour plus each. Okay, so there is some homework there for you. And then also last weekend or 2 weekends ago, actually, I did another one on options, and more to come this weekend on options. Okay, so you need to do some catching up there, because obviously options is an asset, that kind of stands on its own. Okay, it's an animal with its own life. Okay, it's a very different asset. Okay, the UFOs are the same, but then what you could do with options is a different story. Okay, so non-directional trading and all those things, okay, is something for you to explore by watching all those videos. I wish I could teach it in 5 minutes, but really it took me 7 videos, 2 hour plus each. Okay, so we need to ask you to do that, and certainly it will be very, very informative, eye-opener, and hopefully gets you up to speed. Okay, so anyway, so then I will need to move to that UFO, okay, which is 129. Certainly 129, okay, it's beyond 123, okay, certainly. Okay, but now the question is how much I get paid for 129. I mean, the 128 pays me 2 cents. So there's no way I can use October 11. I will need to use October 18, and the 129, will not pay me the 25 cents minimum I need. Okay, so we've been there before, isn't it? If you remember the past sessions that we have done together, we struggle a little bit to find non-directional trades. Okay, and I remember telling you the VIX has been dropping. Remember last week? The VIX was around these levels, okay? So the VIX now is a little higher. Instead of 14 is 16. So we got a little more premium built in, okay? We got a little more premium built in, which is, likely going to allow us to at least plan one trade. But we still need to work to find the right setup with the right premium. And we should do that, always do that, okay? We should be picky, we should be demanding, because this adds quality to our trades. Okay, so UNP, Union Pacific Corporation, October 17. So we can go all the way to October 11, expiration date. Oh, thank you very much, Lisa, with your comment when it comes to the videos. You guys are so kind to me. It's so appreciated. So we got 50% probability with, oh, by the way, I want to change this to the normal settings I use. It's not like it makes a massive difference, but it's kind of like what I do, and we need to be mechanical. So we got 48.6% with regular session, pre and post market for UMP give us 46. Okay, so certainly 48 is better. And remember, because it's non-directional, I'll take it. I'm not so happy, but I'll still take it. I'm okay. Okay. So what do we do with that? Okay, without even thinking, UNP, okay, we're gonna go for the shorter expiration date. We always start from the shorter, October 4. We're gonna right click, analyze and sell, iron condor, okay? And again, we got the plus and the minus, one standard deviation, which is 169, 158 for October 4. So 169, 159, okay, so 169, 159. So 159 is here. 169 is here. Okay. So what can we do? Well, we need to go for that UFO. Okay. That UFO. And 159 is not good enough. We need to go for that UFO. Okay. So price is more or less in the middle of both of those UFOs. So the question is how much I get paid for the 172 call that expires in October 4. Okay, and guys, I am aware that I am moving. Okay, I'm moving at a certain pace. Okay, and if options is something new to you, probably I'm kind of challenging a little bit you following the session, because it's a lot of information, a lot of changing screens, and a lot of using different tools. But again, if you watch those videos and you practice a little bit and you bear with me, this through practice and repetition becomes second nature, and it's actually quite simple, even though it may not look simple at first. Okay, Alton, absolutely videos, excellent learning experience. Thanks a lot again, my friends. Yeah, I just have no words. You guys, so nice to me. So 172.20, we got 172.5, and notice that with that expiration date we get paid 11, still a little bit short premium. So what if we use October 11? The 172.5 does give us the 36 we need. So now we're good. But again, don't forget to change October 4 to October 11 to make sure probability still confirm the trade. So probability suggests 171.5, okay, and what we have here is 172.2. So we're fine. On the bottom part, probability suggests 157.05, and here we got 157.21, so 0.5 would be here. Okay, so that's not good. Just give me 1 second, guys. So that's not good because we will need a UFO to be just a little lower. Okay, so if I move lower, I got another UFO here. Okay, so then I could now plan my trade to be like this. Okay, so the 172.5 would pay me, as I said, 37, which is, according to rules, is 35 or more, so I'm fine. And now we got the 153 below, okay, where the 153, let's call it 152.5, would pay you 44, which is also, according to rules, above 35. So we got something here, my friends. Okay, so what are we gonna do? Well, let me write it on the chart so it's a little clearer for following an interpretation. So we are doing an iron condor. Iron condors are done by buying calls above and selling calls as well. Okay, sell the call and buy the call above. We are using October 11, 2019 expiration date. That's the expiration. We are also, the iron condor is also done by selling puts below and buy puts below the puts you sold. That's what an iron condor is. Okay, and also out of curiosity, earnings are on. We said, I think it's 17, yes. So October 17, just for you to take a screenshot of this so you have it on your screen and you don't make a mistake of forgetting that there were earnings, okay? So what did we say we're gonna do? We said we're gonna do the 172.5. Then we need to buy something above, which likely is gonna be the 175, but I need to confirm that. And below we said that we're gonna sell the 152.5, okay? And therefore, very, very likely, the one that will buy below is gonna be the 150, okay? But I need to confirm all of this. So let's go back to the option chain, okay? And let's go ahead and enter all those parameters. So we said 175 and 172.5, and below we said 150 and 152.5, okay? So let's go ahead and take a look. It looks to me that we have a trade, but I want to confirm and review everything together with you guys just to make sure everybody is following, so you can replicate that yourself when I'm not around, okay? That's the ultimate goal, okay? We have a few more comments. Oh, that's very nice to hear, Thui. I am happy that I can now follow you live and not get confused. Videos are amazing. Thank you so much. Thank you so much for that. And it makes me so happy because that's the goal. And if I see that transformation in you guys, really, it makes my day. Okay, so thanks for sharing. And also, by the way, if you're going to be watching those videos starting from now on, for example, Vincentius, just make sure that you send questions as well. If you have any question, we'll also be happy to answer those questions if you're watching those videos and you didn't have the opportunity to watch them live when I was teaching them. Okay, so happy to do that as well. DHK, you are new UFO, you're still learn. Absolutely. So this is the way to go. Just keep joining us, keep asking questions, keep plugging into the sessions. Even if at times it's a little fast, a little overwhelming, just stay with us, okay? Because the live sessions, of course I have to move efficiently because the goal is to take trades. So I have to move efficiently, even though I also need to somehow share my thinking process so you guys can replicate what I do while I'm not around, okay? So there is always, a lots of talking from my side, if you wish, even if I'm trying to rush. Okay, but somehow, when you do that, even if I get you to a point where it's a little challenging, a little confusing, but then you watch the video again, or then you go watch the sharpening videos where I don't rush. next thing you know, it kind of clicks, So it's like learning a language and you have people around you that speak that language. You know what? The first time you heard that language, you didn't understand anything, but now everything sounds familiar as you are learning the language. Okay, so it's kind of the same. So just ask and ask for support from us whenever you need it. Okay, and that's when your UFOs will fly the happiest. Okay. Well, Lisa, thank you so much for your comment as well. Again, you guys are very, very kind. So anyway, so what do we have here? So we have the Iron Condor here, and when looking at the amount of premium that we would potentially collect, as you can see, it's 34. Okay, so if I 1 second here. Okay, here we go. Okay, now, so if I go back. Here we go. So if I go back to my rules, okay, so what we said is that you want a minimum of 35. We got that accomplished both on the call and the put side, remember? We got 30 something on one side and 44 on the other side. So we got that accomplished, okay? But then the next rule is also that we need to at least collect 15% of what the risk would be, being the risk, the difference between strikes, okay? So what's the difference between strikes here? Well, 150 to 152.5, that's $2.5. 172.5 to 175, it's $2.5. So out of those puts and calls that are separated by $2.5, which one is the greatest? Well, they're not greatest, they're just the same. Okay, it's $2.5. So what's the greatest risk? $2.5. Okay? And what else do you want? Well, we said we want that the premium we would collect from the Condor overall, the Iron Condor, and also for the new options traders in the room, please don't ever get intimidated by options terminology or names. Iron Condor, my God. I remember when I started, it was so intimidating to me, and then it's a piece of cake. It's just two credit spreads, isn't it? It's really not complicated. So don't be intimidated, okay? Just watch those videos, okay? And so what we said is that if 2.5 is the maximum risk, and what we want is to collect 15% of that at a minimum, and that's 37.5, well, notice that we got 37, okay? So we are right there at the limit. Look at that, 38 now. So we are right there at the limit, okay? So yes, we're gonna take the trade. The trade is valid, and I'm just gonna enter an order here, okay? Because I'm doing this in a SIM account, I will do it market. But in your case, please, please, please don't do that. In your case, go ahead, switch to limit, okay? And go for 38, okay? That's what you should do. Now, you may say, wait a minute, the midpoint is 36, and sometimes it's already tough to get the midpoint. Yes, but patience pay. Okay, so place that order at 38 and wait. If you wish, make the order a day order. Okay, so if you don't get filled on the day, you know what, you miss the fill, it's okay. Let's reassess the trade tomorrow. Okay, but more often than not, okay, especially because this is a pretty okay stock when it comes to liquidity, UNP, okay, more often than not, you will get that midpoint, because in the end, market makers are going to be looking at this guy, he wants 4 options. If I don't give him that midpoint, I'm not going to execute those 4 options, and I'm going to miss on exchange fees, if you are the exchange or you're a market maker, other type of commissions or arbitrage opportunities, or maybe closing some other positions that match with your position that you're entering, and more often than not, you'll get that price. Okay, so I'm just gonna go for it. Place order. Okay, click yes. Okay.
Order filled.
Just got filled on my side. Of course, I did market. Okay, so now you can see if I click on the manage section that now I got a trade here with UNP. Okay, with 4 legs, okay? 4 legs, which if I drag on top of each other, like this, okay? Like this, I just drag them on top of each other. Okay, if I do that, okay? Drag it on top of each other, well, notice now here it shows as Iron Condor, okay? So I can go ahead and delete that thing here, and delete that thing here, and delete that thing here. Just be left with one line where if I expand it, I got all my positions here, which is my Iron Condor, okay? And maybe that's a little bit of a simpler way on how to see that. And also you can see the time decay for this option is paying you 2.80. Okay, so now the portfolio is collecting some time decay, as you know. This is one of the benefits of non-directional trading, okay? So anyway, guys, I'm looking at the clock. We just surpassed the top of the hour by 2 minutes. So I think that we're gonna call it the day. Okay, in today's session we got an execution with UNP. Took a little bit of work to find one of those trades. Okay, but again, as I said, the VIX is not super high. After having the VIX to fall and going back up around the 16 level, some stocks such as UNP happen to have a little more premium built in, and we just found a way to take advantage of that and get the trading. Okay, so again, when markets are very volatile and you have plenty of premium, every stock you load will very easily give you a proper setup for an iron condor. When the markets are not so volatile, then we have to work a little longer with the charts, say no a few more times, stay in that demanding mode until we find the quality setups that we need as proper traders. Okay, but anyway, super pleasure, guys, to have joined you here in the session as always. We'll see you over the weekend. Okay, we'll see you again this weekend. We'll continue talking about options. Okay, and keep expanding our knowledge, our skill, our everything. And by the way, if you have questions, even though this weekend is not a proper Q&A session, if you wish, or an exclusive Q&A session, certainly if you have options questions, bring them to the session and I'll make time to give you answers, okay? And this applies to both the ones of you watching this live and the ones of you watching this recorded. So anyway, everybody takes care, keep up the good work, keep up the discipline, follow the rules, okay? And, keep in that mode. That's how you get to meet your goals, guys, okay? See you soon. Bye-bye. See you over the weekend. Take care.